Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska Soybean Farmers and their checkoff. I'm Susan Littlefield, on location this week at the National Association of Farm Broadcasting Annual Convention taking place in Kansas City, Missouri. It's been an interesting week once again. We had a lot of roller coasters within the trade, a lot of factors that were kind of feeding into what we saw. We're going to take a look at what's happening in the basis, South America, cattle on feed report that came out on Friday, along, of course, what we know has been the continued grain negotiations for shipments out of Russia and Ukraine. Stick around. We got a lot more coming up on today's episode.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back once again. As you can see, joining me is Kyle Bumsted and Jeff Peterson. Kyle with Allendale and Jeff with Heartland Farm Partners. And I think to sum it up, it definitely has been kind of a topsy-turvy kind of week. I've never seen that much volatility going on in the trade. And Kyle, I want to start with you because we had a big report come out on Friday. But first of all, this cattle market, for the longest time, we couldn't decide if you want to be positive or negative on the week.
Well, that's right, Susan. And we ended the week on a very positive note. We took out some very, very good levels here on a closing basis here in both the December and the February live cattle. Of course, December going into delivery very soon, and February being the front month contract now at the volume and the open interest. But cattle on feed came out here the Friday afternoon. The on-feed number was 98%. The placements were 93.9%, and the marketing's at 100.6. So the marketings were kind of right in line with where the trade was anticipating them. But looking here at the placement number, that was the lowest, I believe, for the month of October, dating clear back since the series started in 1996. So the on-feed number, that's one of the lowest numbers we've seen here for November 1 as well, too. But I want to kind of dig into it a little bit further. The number of cattle we placed on the lighter end of things still trending upward, or still a bigger number. I'd like to see that kind of work down. I think we will over time here as we get work through these calves and these cows come in off grass and get weaned and we start heading to town. But long term, it does look friendly, but I think our on-feed numbers could slightly work higher here in the future.
Does that make you nervous, though, when you talk about some of the lowest numbers we've seen in November?
Somewhat, yes. It does make me a little bit nervous, and I just keep thinking back the last few months. We've placed a lot of cattle early, so there's going to be quite a few cattle to come out and hit the rails here, that first and second quarter, and I don't think we'll quite be worked through it here by the end of the first quarter. I think by the second quarter, we're going to be through it if we keep up with this slaughter pace, but I really do think that we do need to keep an eye on demand as far as box beef goes and what the retail charge and things like that. It really doesn't matter what the price of a steak costs if the consumer doesn't have money to pay for it.
Definitely. Now, Jeff, from a flip side of that, from a grain perspective, if you're seeing lower numbers in a November cattle on feed report, means there's not much mouths to feed with the grain that we're producing.
Yeah, and you're exactly right. And we've been watching that close because all eyes are on the demand. We get to this time of year, the whole discussion about supply, and we get the November report behind us, and we won't get an update until as we get out into January. So the focus does shift over to just how much demand is there. We had some really good export demand numbers this week, but our overall feel, and this was really interesting to listen to Kyle, is that we thought we'd actually see down the road the feed number go up higher. And so we're going to have to watch that close based on what we're seeing on that cattle and feed number. Our logic behind that was the fact that there has been a lot of cattle that's had to go in the feed yard because of the dry conditions that we've had out there. We also know that ultimately in many of those areas, they've also had, because of the dryness, their hay prices and the lack of availability to some of that also drives them to be very conscious about, need to incorporate more corn into the ration. We also know as you get down into Kansas, also because the wheat crop and where that was at, there wasn't quite as much feed wheat out there either. So those things all come together. So we're hopeful down the road that we'll end up seeing some bigger, numbers come on the cattle on feed side and ultimately drive some better feed demand down the road. So that's what we're keeping a close eye on the demand side, Susan.
What are you looking at for basis then right now?
Well, basis has been so strong, and it really comes back. If we just sum up what's going on there is that obviously Kansas, they were short bushels. Some would say they're short 180 to 200 million bushels that needs to be sourced, outside of those areas because of the size of the crop. it's amazing as we look at the Nebraska number, when we studied what the production was and how much, we look back, the September quarterly stocks report was there. We'd suggest that Nebraska's a couple 100 million bushels lower than there was for stocks last year. And overall, we see this basis number still getting stronger. But what I'd caution everybody on is that there is a point in time in here where this basis will go ahead and peak out. Is it possible that, when we consider from December through, say, March, that happens in that December timeframe? It's possible. So don't be afraid of letting some bushels go on the basis side on the corn in here to maybe a little bit sooner than you'd like. We think as we get out into April, May, that basis will be stronger. As we get out in the summer months, it just really depends on ultimately how the demand looks at that time. But then we come back and look at the bean basis, and honestly, the bean crush margins are phenomenal right now, Susan. So we think there's room to see a stronger basis level yet on the bean side as we go forward.
So Kyle, how does this basis weigh in for you guys with the being end users of this grain?
Well, yeah, obviously it hurts when you're trying to buy cash grain. I know here in central Nebraska, here even local co-ops are 40 to 50 over because they're competing with feed yards and the ethanol side of things here. So really on these on dips like we've just seen here, we got down to some chart levels here on the 657. The March corn, we got some retracement levels here, and so there was a little bit of end user procurement down there. Not too terrible much, but there was a little bit of buying there on the cash side if their basis worked in their favor. Now, that's really tough because a lot of places where the board did drop, the basis didn't change. The cash price didn't change at the local co-op, whether you're selling or buying corn. It stayed the same, whether the futures dropped or not. And in fact, this week here, if you look at like a theoretical calculation versus the December futures here, December corn's actually running about 10 cents over a 10 cent basis, whereas a year ago we were about 13 to 13 and a half cents under December futures. And the case of soybeans, we're about 25 and a half, I believe, under the January futures, whereas a year ago we were around 38 to 40 under the January futures. So it does speak that you have that demand in very strong, and you can see that through the spreads where we have inversions or very little to no carry in the corn market all the way out, and also getting a little bit of a look at that commercial thought process behind South America's production by looking at that March day soybean spread there.
And we really haven't heard, and both of y'all want to kind of get your thoughts on this. We really haven't heard a lot out of South America lately about how dry it is, except for Chile. I saw some reports about it being so extremely dry there. Kyle, what are you hearing about crop development right now?
Well, it's very, I guess I'm looking more at a market structure and what the commercials are thinking here by looking at that March to May bean spread. And I've heard all kinds of weather reports about how dry it is. And it's kind of like our weather. It's dry and then there's rain in the forecast and it's dry and then there's rain in the forecast and it's dry. And it just depends on how long that dryness stays there and how much rain actually falls. But looking at that March to May bean spread carry at about 6 cents carry from March to May kind of tells us that the commercials are worried about South America's crop here and there's only 20% carry. So that's the one that we really need to watch because March through May timeframe is their harvest timeframe while we're trying to get our crop in the ground here.
Right. So Jeff, with your context, what are you hearing about the dryness?
Yeah. So as we dig into it overall, what we'd say is you break it apart into Brazil and then in Argentina. Brazil is actually in really good shape. Might be a little bit of dryness down the very southeast corner. Now we are seeing some drier conditions in Argentina. As a result, that actually slowed up some of their planting progress for a while, but they're back going. Overall, they're still on our watch list there, but here's the way we kind of see it. As we look up to Brazil, we think any problems that could happen in Argentina probably can be overcome by some better than conditions that actually could mean, above trend yields coming out of Brazil. And just a couple notes here, Susan. Actually, the current forecast that USDA has just for Brazil would suggest that they could produce over 500 million bushels more than what they produced last year on the corn side and over 1 billion bushel more beans on the soybean side. So if we want this futures market to move higher as we go down the road, we're going to have to see some dry conditions develop greater than what we have currently, because right now overall I'd say that the conditions coming out of South America are supportive, positive Argentina, and then actually a little bit negative coming out of Brazil. And so that's what the South American situation looks like to us, Susan.
All right, as we continue here at the Nebraska Soybean Board Weekly Market Roundup, gentlemen, let's kind of focus on Russia-Ukraine. We did get another little agreement, shall we say, in place, but there's a lot weighing on that. Jeff, what are your thoughts?
There sure is, and boy, I really feel my thoughts and my prayers go out to the Ukrainian people. They're getting Russia's not able to make any progress with the ground troops, and so as a result, they just continue to shell them. One of the things we ended up seeing this week on the 15th is that we did end up seeing how sensitive the market is when all of a sudden a supposed Russian missile ends up in Poland. You can see how quickly the market takes off.
Mm-hmm.
Now, there's still some discussion on that missile, whether it actually was Ukraine shooting some type of old Russian missiles, to shoot down one coming from Russia. I'm not quite sure what the whole story is there, but the fact remains that it's kind of behind the market side. But the one thing we have to watch going forward, though, I think is, what are they going to be able to go ahead and get planted as we come into the spring? We know we got the grain corridor in place. We know it's going to be in place for 120 days. It's going to come out of those same 3 ports around Odessa that it was before. But my bigger point becomes, how much of a crop are they going to be able to get planted next spring? What is there going to be for money? And what is there going to be the ability to get bushels at that time produced for that next year, Susan?
All right, Kyle, what do you think? And I know I talked to a Ukrainian farmer this week at this conference. They're still trying to think about getting a crop in the ground, getting it planted, and moving forward into 23.
Well, that's right, and especially our winter wheat over in that country as well too. They're a big wheat producer over in that area. It's the breadbasket over there, like we are here in the Western Plains. So it's tough to say, but also what kind of fertilizer availability are they going to have, or be able to get a hold of, and fuel availability and things like that, just like we're kind of seeing here as far as concerned stateside, just some small amounts.
Well, we talked a lot about great things this week, guys. I appreciate you for joining us on the show.
You bet. Thanks a lot, Susan.
Thanks,
all right,
Susan.
as you can see, Kyle Bumsted and Jeff Peterson joining us this week. As we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's version of the Nebraska Soybean Board Weekly Market Roundup here on the Rural Radio Network.